Do you want to know the top 5 self-directed IRA companies out there? Then I want you to stick around till the end of today's conversation. Welcome back, folks, to another edition of the Awesome Studio Kiwi Show. How are you doing today? I hope you are doing fantastic. I'm doing marvelous, if you were to ask me. If you are doing as great as I am, go grab a cup of coffee or tea or vodka and let's roll. Today I want to have an important conversation about an important topic. What are the top 5 self-directed IRA companies out there? Now, before we get into the nitty-gritty here, it is very important to understand that as you're all looking for the best IRA companies out there, self-directed IRA companies, you need to think about the best custodian to match your investment needs and preferences. This is very important because if you are an IRA investor out there and you are seeking higher returns and more diversification, you gotta think about self-directed IRAs. They're usually called SDIRAs. That's because self-directed IRAs allows investors to own assets beyond the typical stocks, bonds, ETFs, and mutual fund investments that can be held in a traditional IRA, right? So if you want to diversify, you want to go beyond the traditional gamut, you might be thinking about things like real estate, closely held businesses, precious metals, foreign currencies, right? Private loans, cryptocurrencies, commodities. I want you to think large here. I want you to broaden your horizons. Now, let me just give you a caveat though. Self-directed IRAs are not for everyone because you might be getting those type of investments might offer some investors more control and flexibility over their investment choices, but they require a higher level of investment knowledge and savvy well beyond the capacity of most investors. So it's one of those things you gotta ask yourself: do I really? Is this for me? Is a self-directed IRA for me? Now, what is it really? What is the proper definition? Because you got to understand the proper definition of a self-directed IRA before even thinking about finding the best self-directed IRAs. A self-directed IRA is a specialized account set up through a custodian or administrator that allows you to invest in many types of alternative investments. Popular investment choices include real estate property, I've said that before, precious metal, crypto, tax liens, and private loans. By private loans, I'm talking about things like you can go to P2P lending platforms such as SoFi or Lending Club, that kind of stuff. And aside from that investment flexibility, a self-directed investment IRAs is similar to a traditional IRAs with the same tax advantages and contribution limitations. Now, I want you to really remember this. Custodians do not provide investment advice, so you are on your own to perform the necessary due diligence on investment options. That's why investing in self-directed IRAs can be especially risky. Besides, the rules and restrictions for establishing and investing in this kind of IRAs can be complicated. And the thing here is that because of that, the IRS is always on the lookout for some audit opportunities. So before you get into the nitty-gritty, if this is the option you want to pursue, please consult with a tax advisor, a CPA, or a financial advisor before setting up or investing in a self-directed IRAs. The thing here is that as you're thinking about self-directed IRAs, what does it cost, right? This is something you got to think about. There are 3 types of fees. I want you to remember this. 3 sets of fees that you got to think about when you want to go to a self-directed IRA route. You have a setup fee, the annual administrative fee, and a transaction fee. Now, for the custodians that I'm going to review today, the setup fee ranges from $0 to $350. Most custodians charge an annual administrative fee based on a sliding scale of the investment account size, and this really ranges from 150 to more than 2,000. It really depends on your asset sizes too, on your asset size too. And a few of the custodians in our review today, they charge more competitive administration fees, ranging from a flat monthly fee of $15 to a flat annual fee of $350. And most custodians also charge something called a transaction fee, and this is typically between $35 and $250, and this depends on the buy, sell, or exchange, depending again on the transaction size. The thing here is that as an SDIRA is kind of cool, it's best suited for experienced and savvy investors. Folks, I've said this before. If you are experienced, if you are savvy, if you know what you're doing, if you are pretty comfortable with the subtleties of investment, and if you're not satisfied with the returns or diversification available through traditional investments, then you might be thinking about a self-directed IRA, because investing in alternative investments will give you the opportunity to earn higher returns, diversify your portfolio. But remember, they also come, this kind of investments, alternative investments, also come with commensurate risk. This is kind of important because you don't get yourself into a position where you really don't understand the ins and outs. All right. Many alternative investment options that we have reviewed are restricted to investors with a higher income or net worth. Now, the authorities that usually defines this kind of people, this kind of investor category, sophisticated, and they usually you got to have at least $250,000 as income, annual income, and $500,000 as net worth. And one thing I want you to understand is that even if you're a smaller investor, there are plenty of investment options that you can think about to when it comes to funding your self-directed IRA. But again, it is your responsibility, your ultimate responsibility, to understand the risks. Now, how did we choose the top 5 self-directed IRA companies? The thing here is that we have reviewed several dozens of top self-directed IRA custodians out there based on several factors. We look at their reputation, we look at things like investment options, the checkbook control, ease of account setup, the user friendliness of the interface, and so on and so forth. Check this short video to see our retirement services evaluation approach. That kind of tells you how we go about reviewing, categorizing, and evaluating those custodians. Check this out. All right, folks, let's just get right into it. Number 5, Entrust Group. Great company. Our score 9/10. This is great if you're looking for an investment platform that suits your investment strategies in the long run. This is great. If you are a client of Entrust Group, you have access to a proprietary investment platform that connects you with numerous alternative investments, making your life a lot easier. What are the pros here? They have extensive experience as an SDIRA custodian. SDIRA stands for what? Self-Directed IRA, right? You also have easy access to investment options through the investment platform, and you have access to best-in-class financial planning program. Their planning program is kind of cool. First, folks, you have to check it out. And what are the cons here? They might sometimes they have some kind of high administrative fees, especially if you are the higher end of the spectrum, and their checkbook control must be established outside of interest. In other words, they don't control the whole value chain. So it's not a biggie, though. It's not a biggie, but this is something you might want to think about. Now, this is a company that has been around for a while. They've been around for the last 40 years, folks. 40 years. They have experience. They have grown into one of the most reputable self-directed IRA companies in the industry. And what I really like with when we were reviewing this company, we love the fact that you can access the services of the company directly, or even better, through a financial advisor. Now, when it comes to the fees of that financial advisor, it depends on your asset size. The company might actually absorb those fees, or you might have to pay for it. Now, if you use either avenue, either directly or through a financial advisor, you as a client can access an investment platform for managing your investments and searching for potential investment options. This is fantastic, folks. And one thing we also like is the fact that their platform integrates their advisor portal to eMoney Advisor for investors who want to do more holistic planning for retirement. In other words, holistic means what? You are just trying to have a broader view of your strategy, of your long-term retirement strategy. And one thing we also like, and this is a company with a lot of pros, we love the fact that they take their role as a custodian seriously, because they only allow investment options in select sectors on their investment platform. Fantastic. They will educate you. They have a large library of online content designed to educate both investors and advisors about self-directed IRAs and alternative investments. Fantastic. Number 4, we have Rocket Dollar. Rocket Dollar, our score is 9 over 10. This is kind of cool if you have a large portfolio, folks. If you have hundreds of thousands of dollars in portfolio, that's kind of cool. And of course, even though they've been around, it's been 2 or 3 years they've been around, but this is a company that is very innovative. Rocket Dollar has actually smashed all the expectations in the last 2 to 3 years. The thing here is that they actually have introduced several self-directed IRA investing innovations, including a flat $15 monthly administration fee. Think about that. This is fantastic, and this works out particularly well for a larger portfolio. You having a flat monthly administration fee. Awesome. What are the pros here? They have a low fee structure favorable to larger portfolios. I've already said that. And the account setup is very quick, easy, user-friendly, and you can automatically set up a checkbook control. And they also support self-directed solo 401k. We have an entire show that focused on solo 401k. You want to check that out. And what are the cons of this company, Rocket Dollar? As I've said before, they've only been in operation for the last 2 to 3 years, since 2018. So, some investors might be like, I just want to wait a little bit and see and make sure this company is reputable, they're sturdy financially in terms of regulatory compliance before I even put my cash into that. And you know what? Listen, I get that. I agree with you. If you want to be on the cautious side of the spectrum, that's kind of cool too. And another con that we've seen is that they have a high setup fee, right? So the thing here is that with Rocket Dollar, as a client, you are automatically set up with a checkbook LLC, which provides you with more investment opportunities. So beside the standard alternative investment options of, let's say, real estate, cryptocurrencies, precious metals, and private equity, Rocket Dollar has also partnered with several crowdfunding platforms to offer crowdfunded real estate and peer-to-peer loans. This is great because we know that when it comes to the peer-to-peer loans, you are looking at 2 digits in terms of ROI. So if you want to go that route, it is risky though, folks. I keep repeating that. It is risky. However, if you want to go the P2P, peer-to-peer loan route, you could be looking at some nice ROIs in return. I'm talking here 10%, 11%, 15%, according to recent research by McKinsey or Deloitte. And Rocket Dollar's fee structure is unique, and this can be very attractive for investors with larger portfolios because, as I said earlier, there is no sliding scale for cost based on the amount of assets. Think about it. The $15 amount flat fee, marvelous. Think about it. If you have, for example, $350,000 or $360,000 in asset, that works out to just 0.05% at $15 a month. That's fantastic. And if you have $500,000, it goes even lower. All right. Now the setup fee is $360, which is higher than most of its peers, but at least it's a one-time fee. I'll be right back right after this. Don't go anywhere. Welcome back, folks, to another edition of the Awesome Sweetie Kiwi Show. We're actually having a conversation today about the top 5 self-directed IRA companies. All right, ready to roll? Let's keep on going. Number 3, we have Alto IRA. Our score, 9.5 over 10. I'm telling you, folks, when it comes to investor experience, Alto is the king or the queen. They are great. Now, they've been around for the last 5 years. I understand they're kind of new, but they have created an easy-to-use, streamlined, automated process of investing in alternative investments. And it's been great. They have had rave accolades and reviews on the internet. Fantastic. What are the pros of Alto IRA? The technology platform streamlines the investment process. They have a quick, easy online setup, and they have low fees. The cons, they are a relative newcomer, and they kind of have a somewhat complicated fee structure. It took us a while to understand, to really get our heads around their fee structure. So Alto IRA, this is something you guys need to straighten out. You need to really, really, really make it very easy for investors. But long story short, this is a great company, and they have, since their inception in 2016, the company has set out to popularize self-directed IRA investing in alternative investments, and because they were trying to empower all investors that want a greater return and diversification in their IRAs. So setting up and investing in self-directed IRAs can be complicated and somewhat expensive for most investors. And this is a company, Alto IRA, that has a scalable technology platform, right? That is making it, and they have a user-friendly interface, cost-effective. They have an app. You can track things on your mobile. Fantastic. They also give you, as an investor, they give you access to a wide range of alternative investments, and they partner with real estate lending companies, crypto exchanges, angel investing funds, and many other alternative investment providers. And if you use the Alto's checkbook IRA, you have maximum control for better management of your real estate investment. And one thing we also like is that they actually cover the whole gamut when it comes to IRAs, because they support traditional IRAs, Roth IRAs, and SEP IRAs. Number 2, folks, we're moving on here. Number 2, IRA Financial. Our score, 9.5 over 10. Are you scared to go the self-directed IRA route because of audit? You were thinking that the IRS might audit you. Here is a company for you. This company, IRA Financial, is great, is terrific for audit protection. So investing in SDIRAs can invite IRS scrutiny. No question about it. But IRA Financial has your back if you're ever subjected to an audit. What are the pros? You have audit protection. They have online educational resources, checkbook control, folks. And on top of that, they have what? They have a low annual custodian fee. We love that. And the cons, they kind of have a cumbersome account setup process. The thing here is that this is a company that has been around for the last 10 years, but they are gaining traction. They have been gaining traction in the self-directed IRA space, and what they're doing is that they are basically differentiating themselves as the only firm to stand by their clients should they come under an IRS audit. So between the structuring of a self-directed IRA and the transactions that occurred inside them, their complexity can invite IRS scrutiny. And it is essential to know that you are working with a firm that is willing to stand by you. This is very important, especially if you have no knack for investment yourselves. So this company, the IRA Financial, they were established by a team of tax specialists and CPAs who really understand the myriad rules and restrictions governing IRAs. They will offer you a checkbook IRA that provides access to a full array of alternative investment options, including again, we're talking about the real estate, the precious metals, private equity, private loans, the whole 9 yards, foreign currencies, cryptocurrencies. And IRA Financials offers self-directed IRAs without checkbook control. But the great thing here is that their checkbook IRA offers far more investment options and it is more cost effective. There is no setup fee for opening a checkbook IRA, but clients pay an annual custodian fee between $180 and $360, which is, if you really think about it, less than most of what the competitors are charging. You'll pay a transaction fee of $35 to $45 each time you buy, sell, or exchange an investment. So one thing is that you can start the process on the internet if you want to set up a self-directed IRA with IRA Financial. You can start the process on the internet. The problem is, as I said earlier, it is kind of cumbersome because the process requires some extra step that must be completed by phone with the help of an IRA Financial account specialist. We reached out to IRA Financial and they told us they were working on that. They are working on streamlining the process. So, we are giving them a kudos for that. Okay, number one, I know you'll be waiting for this. The top self-directed IRA company, in our view, right now, hands down, is Equity Trust. Our score, 10 over 10. This is the best overall, and this is a company that's been in the industry for the last nearly 40 years, 4 decades, folks, and they've been a self-directed IRA provider, and they have between $20 to $50 billion in invested assets. And they have here is a company that has forged the right combination of experience, investment capabilities, and most important thing, folks, customer focus. You gotta have, if you're looking for a self-directed IRA company, you want to have a company that has a focus on investors, and Equity Trust does this superbly. What are the pros here? The company has extensive experience as an SDIRA custodian. There are no transaction fees. They have personal client support through 400 specialists, even more. And you have access to traditional investments. I'm talking about stocks, bonds, ETFs, right? So when you're thinking about self-directed IRAs, you're thinking about alternative investments. But here is a company, Equity Trust, that allows you not only to have access to alternative investments, but also to have access to traditional investments. You're getting the best of both worlds. Fantastic. The cons. The administrative fees are on the high end of the spectrum. You have no checkbook control. And the thing here is that for us, it's still okay. It's still okay. The fact that the company does not offer checkbook control is a little issue. Clients have to issue directions to Equity Trust to invest funds from their account. Now that can be cumbersome for clients who want more control over their cash, but clients can access more than 400 specialists to help facilitate transactions. In addition to the specialists who are also available to assist clients throughout the setup, investing, and maintenance process, the company provides excellent educational tools to help clients understand their investment choices. So here you have it. You have a company that has experience, that has been in the game, in the self-directed IRA game for the last 40 years, that has billions of dollars, tens of billions of dollars in invested assets, has a team of 400 plus specialists that accompanies you, and more importantly, a company that cares about your educational level when it comes to investment. So they have a database of investment categories or content out there. Fantastic. Equity Trust, our number one. I'll be right back right after this. Don't go anywhere. Welcome back, folks, to another section of the Awesome Sweetie Kiwi Show. I want to give you a bonus. I just love you guys so much that I'm going to give you a bonus. While doing our research for this show, we found another great company that we just thought might be fantastic to talk about, and this is SDIRA IRA. And our score is a 9/10. And this company is great for real estate investing. As you know, when it comes to self-directed IRAs, you have a constellation of alternative investments, of which real estate investing is one, right? And you direct IRA is specializing in that, and they have actually got their starts by specializing in self-directed IRA real estate investments. The company maintains that edge today, making it our choice as the best self-directed IRA company for real estate investing. What are the pros here? They have extensive expertise, folks. When it comes to real estate investing, that's their food. They have extensive expertise. They have resources for that. You have checkbook control, another pro, and they have low annual administrative fee. On the drawback side, on the cons, the setup process is not very streamlined. And one thing we kind of like is that, but this is not a biggie. This can be actually taken care of very quickly. One thing I want to stress today is that here is a company that has been founded in 1994, and at the beginning, the founders were all real estate experts, so they know what they're talking about when it comes to real estate. And UDirect IRA offers a checkbook IRA with a wide range of investment options, but with a strong tilt toward real estate investments. Here, when I'm talking about real estate investments, I'm talking about everything from real property, real estate notes, to REITs. REIT stands for Real Estate Investment Trust. And you also have tax lien certificates. A lot of people don't understand. If you are a true real estate investor, you got to check out tax lien certificates. This is important. This is where the beta when it comes to real estate investment is made. This is where the extra ROI is made. Tax lien certificates. So, in addition to a wider variety of real estate investments, UDirect Checkbook IRA provides access to a full range of investment options, including closely held companies, private loans, accounts receivable financing, judgments, legal settlements, and precious metal. And with checkbook control, you as an investor can more quickly react to real estate auctions and when tax lien certificates become available. And in terms of fees, their fees are very reasonable. They charge a $50 account setup fee and just $275 annually for record keeping and reporting services. Transaction fees are $35, but your first 6 transactions are free. Right? And as an investor, you also pay $8 to $18 per month for precious metals or currency storage. One thing we also kind of like when we were actually testing this service is that the account setup is reasonably routine, and you can start the process online, but you will need to print and sign documents which can be scanned and uploaded through the website. Once underway, accounts can be managed online. So, fantastic choice. You might want to give it a try. All right, folks, this is the end of today's conversation. I really appreciate it. Thank you so much for listening to today's conversation. And what are the top 5 self-directed IRA companies? So number 1, we have Equity Trust, 10/10. Number 2, IRA Financial, 9.5/10. Number 3, Alto IRA, 9.5/10. Number 4, Rocket Dollar, 9/10. Number 5, Entrust Group, 9/10. And our bonus, UDirect IRA, our score, 9/10. I will see you next time, but until then, remember, stay marvelous.